want to start off, John, with you. Appreciate you coming on the show again. We spoke in prior episodes that FBC Home Loans is now a sponsor of our show, and they're going to be on our show with us every week. And John's a local sales manager in Tampa. And you sent me an article this week that I thought was impactful, because I think sometimes people that are out there renting a home, don't necessarily always do the calculations to determine how much they're paying in rent versus how much they could own that same property for. And,
Right.
Yeah, and I think again, when you're looking at that, I'd love to hear some examples. Generally, like, what is someone going to pay on a mortgage? Roughly, depending on taxes and insurance, at some particular price points, and talk about some of the benefits of home ownership versus renting.
Okay, great. Good morning, Andrew. I wanted to kind of go over, there was a great article last week in the Tribune, and they showed this one particular couple were paying like $1,500 a month on their rent. And when you kind of step back from that, that $1,500 applied to a mortgage, they'd be looking at probably about $180,000 home that they would be able to buy. That would mean a 3.5% down payment going FHA. If they're a veteran, they can do zero down.
Right.
So great program there for
I think,
service members.
Again, when you look at a $180,000 home, is actually about an average home in Tampa Bay. I mean, you're not looking at like the bottom of the market, for the renting crowd. I mean, you're looking at a nice home in a good neighborhood. A lot of newer homes, you can find depending on where in Tampa Bay that you want to be. And I think again, just understanding that people that are looking at it, from a perspective of what's the best financial decision, as we start to look at next year, maybe rates go up a little bit, maybe prices go up a little bit. So some of the people that have been kind of sitting on the fence waiting, I think unfortunately, maybe met with some higher costs and things as the year goes along, because we've continued to see that trend of prices rising locally.
Absolutely. In addition, every model out there pretty much predicts that interest rates will begin to rise. We've seen a little bit of that over the last few months, and the trend is expected to continue. So if you're in the market, now is definitely the time to plan on getting a new home next year.
And you think about it, I own some rental property myself, so we manage some of our rental properties, and certainly we love having tenants in there. But if you think about the grand scheme of things, when you're renting a property, you're really creating wealth for someone else. You're not paying off that asset. You're not getting the tax deductions. Granted, you don't have some of the risk, but at the same time, you see some of the large institutional investors that have come into Tampa Bay and bought up these hundreds of thousands, not hundreds of thousands, but hundreds and thousands of homes, and turned them into rentals. They do a nice job renovating them and all that to get that premium rent, but you could do the same thing on your own and own that property for less. You're providing a margin, a return for that person. There's a markup to that. And I think, again, as you've seen that continue to happen, the thing I tell first-time home buyers is, look, if these institutional investors have come in here and spent hundreds of millions of dollars to buy property, and they've done all the research to determine values and that sort of thing, don't you think that's probably a good sign, that it's safe for you to buy a home?
Absolutely.
I mean, if these people are spending hundreds of millions of dollars to buy homes here, they've done their research. They know that it's a safe investment.
Right, and the Florida market, the Tampa Bay market's going to continue to grow.
Yep. What are so down payments? Obviously, with VA, if someone's out there that is a current currently in the military or is a veteran, you can qualify for a no down payment loan. But for everybody else that's not, there's USDA where you can go no money down in certain areas. But with FHA, for example, needing a down payment, what are some sources of the down payment? Where can that money come from? It doesn't always just have to be their own money, correct?
Correct. So on an FHA loan, what you can look at is the borrower can get a 100% gift for their 3.5% down, and that's up to a mortgage up to $292,500 in our local market. And then conventional, you can put as little as 5% down.
And the conventional goes up to $417, which means a purchase price of somewhere around like $440 or so, because the 5% down.
Correct.
And then similarly, I think you can, when you look at FHA, if you're talking $292,500, it's a purchase price of somewhere around $301. So that's kind of where the limits are. So they can also take money out of retirement accounts, which you spoke about, which I think again, that's not necessarily right for everyone, but there are options for people if they don't have the money in the bank. but they've got, you know, a 401k or an IRA, and they've got some money put away in there, they can tap into that for a down payment as well.
Right, and we do see that fairly often with folks, as, you know, looking at their 401k at work. You can actually borrow your own money. You know, you do pay it back at a favorable rate, and we don't have to count that debt in your ratios, so you're not having to qualify with that payment. So it's basically you pay yourself back.
Right, and I think, again, that's something that, you know, that doesn't apply to everybody, but there's a certain percentage of people out there that don't necessarily have the money in the bank, but may have put it away through this automatic savings plan, and now it's time for them to, you know, take advantage of the right opportunity and buy. I think the other thing is rental costs have risen. You know, it's getting, you know, it's getting more expensive to rent. Rents are rising, so it starts to, you know, rents are rising, and so are interest rates. So they start to, you know, in an environment where rates are rising but rents aren't, people say, okay, well, I'll just go rent. So, but what they have to understand is, you know, we're in a situation where they're both going to rise. So it really doesn't, you know, it's not favorable to you to not at least look at buying as an option with the tax benefits too. I mean, I'm not a CPA, and this isn't tax advice, but you know, you get some tax benefits from owning a home. You get to write some things off. I think that's something, you know, that a lot of people forget about.
Yeah, they do, and you know, the net, I guess, cost of owning a house is probably less than what you think.
Right, because you're getting those
yeah.
tax benefits
Yeah.
that you don't get versus renting. And so people will look at it and say, okay, my payment over here to rent, my payment over here to buy, it looks cheaper to rent. But they're forgetting that extra money that they're going to not have to pay Uncle Sam because they own and they get to write off, you know, mortgage interest. And that's still around, fortunately.
Yes.
You know, let's keep it that way, but the mortgage interest deduction and, you know, some of the other costs of acquiring the property and things and property taxes and
Real estate taxes,
so
right?
so I think, again, people fail to you know, calculate that when they're really doing the math. What's their tax bracket? What kind of benefit did they get on their taxes from that? And then that's really the true cost of ownership, not just your monthly payment.